You might be losing money simply by trading the double top wrong. Here's how to fix it. So this is what a perfect double top looks like. Nothing strange about it. However, a lot of the time you will be in this type of scenario where the first top forms has a pullback to the neckline, and then the second top over here forms where a lot of people start selling the trade straight away. And that's a huge problem. Just because he has a resistance zone on the double top doesn't mean it actually will just drop down. It's actually the opposite. What usually happens, it just continues moving towards the upside. But again, there's a problem. You might be one of those traders that holds their price action analysis a little bit too long. So you might believe that this neckline and the two tops over here are still relevant. And maybe you would even consider entering a trade short just over here of that bearish engulfing candlestick because you think it's going to retest the neckline. You set up your stop loss and take profit levels, and then you eventually just moves up. Not good, right? Here's a solution. So take a look at this. We have the first top, second top over here. Although the candlestick body has closed above this previous area, it doesn't matter because previous area top wick was over here, which means the double top is still very much relevant. After that, we have a strong bearish candlestick swallowing the previous one. This is a great indication to enter short. However, you wouldn't enter short because that's not how you trade the double top. You don't trade it just off the first top touch. What you want to do when you trade in the double top is wait for a break of the neckline. When the neckline breaks, that is when the double top is actually confirmed. So usually goes up, first touch, second touch, we have a neckline. That neckline has to be broken over here. If it's not broken, you don't enter ever. Now, some people do enter a trade straight away after the neckline breaks, but usually that doesn't give you the best risk to reward. So what do? You wait for a couple of candlesticks to appear and you want to find bearish price action. At the moment, two bullish candlesticks, so don't enter. Get a red one. There we go. There is a red candlestick now telling you that the previous area of support over here became resistance, and likely now because the double top pattern has formed, you can enter the trade short to target around 50 pips. I was slightly wrong. It's around 70 pips actually, but you want to measure the neckline and the top distance between the two and then simply drag this where the neckline has been broken, and that is your take profit level. So this would be ours. We enter the trade over here, target profit around 65 pips. Stop loss could be around 175. That's a pretty damn good risk to reward ratio. And as we can see, it continues moving down and eventually it reaches our target profit level. And after the double top is exhausted, we are seeing bullish pressure simply because there was a nice strong area of support over here. Trust me, it works most of the time. Double top is an amazing price pattern every trader needs to have in their own trading arsenal.